And there are the Janata, the Sonali, and Ograni, these four important banks. Every year, without fail, there's a capital inadequacy situation, capital inadequacy, whereby the government has to pump in through the budget initiatives. The government has to pump in to make the capital adequacy all right for these banks. So this is a very serious situation that we are facing. And to top it all, the COVID-19 has caused disaster within the banking sector, commercial institutions. Many of them are closed. People can't go out because of the lockdown and all that. So we are going to hear a lot from our esteemed speakers. With that, I hand over to our speaker. I think the CEO is supposed to go ahead. Dr. Mahfuzullah.
Okay, sure. Thank you, sir. I would like to introduce to you Dr. Mahfuzul Haq. He's going to speak something about the PRC. He's going to talk about the introduction of the PRC and the history and a short history of it. I would like to introduce to you Dr. Mahfuzul Haq. He's the CEO of PRC, and he's also the ex-secretary, the former secretary of the government of Bangladesh. Dr. Mahfuzul Haq is currently engaged in teaching professions to the universities, to the students of the universities. So I would like to request Dr. Mahfuzul Haq to let the audience know what are the goals of PRC, the objectives and the goals of PRC. Dr. Mahfuzul Haq, please.
Okay, thank you so much. Assalamu alaikum, and a very good evening to you all from Policy Research Center, Bangladesh, PRC.bd. In fact, on behalf of the Policy Research Center, Bangladesh, I would like to welcome you all in today's webinar, which one is the 10th webinar so far. We did conduct here, and in association with the NCRF, NAPSIPAC Community Research Foundation, and the topic you are aware, the topic is impact of COVID-19 on the banking sector on the banking sector. That is something to look into. So perhaps let me give you a little bit introduction about Policy Research Center Bangladesh. In fact, PRC.bd is a national civil society think tank. Okay, so this one is a national civil society think tank, and we have been conducting research and organizing seminars, conferences, both at national level as also at international level, on leading issues on socio-economic development of Bangladesh and South Asian region. Now, our topic of interest so far is that we have been looking into the issue related to sustainable development goals, Millennium Development Goals. Sorry, my unstable internet. So we have been conducting MDGs, SDGs, and the challenges in implementation of SDGs in this part of the world. We've been conducting seminars on capital market, banking, budgeting, environmental development, climate change, disaster risk reduction, tourism development, and etc. We have been, conducting these seminars. Now, for last more than 2 decades, PRC.bd has been in journey with our professor, Dr. Akbaruddin Ahmed, who is a noted educationist and the former Vice Chancellor of Darul Ihsan University, Bangladesh. He has been the chair of this organization since its inception more than 2 decades back. We are also having some networking with other organizations like NAPSIPAC, Network of Asia Pacific Schools and Institutes of Public Administration and Governance, NAPSIPAC, Asia Pacific School of Psychology Association, APSA, Bangladesh School Psychology Society, BSPS, etc. Now, so far we have been, as I did mention, that this is the 10th international online conference. So far, we have been conducting online Zoom meetings every month since the beginning of COVID-19 last year on various topics of national and global interest, ranging from implementation challenges of SDGs, budgeting, banking, youth development, sustainable energy options, COVID-19 challenges, and so on and so forth. So based on this very short introduction, I would like to welcome you all. Based on this short introduction, I would like to welcome you all in today's international conference on impact of COVID-19 on the banking sector. Thank you so much.
Thank you.
Thank you. Thank you, Dr. Mahfouz. Thank you for the introduction. Before we go to the speaker, the keynote speaker, Mr. Kamal Chaudhary, I would like to introduce to you Dr. Syed Nakib Muslim, because he is the moderator of this program. Dr. Syed Nakib Muslim is the former secretary of the government of Bangladesh. He is a renowned educationist. Still now, he is taking classes in the universities and colleges, especially the Notre Dame College. He is also an advisor of PRC. To his credit, he has a number of books published, and he is also a very good writer. He still continues to write on various subjects, especially on the Islamic subjects. I would like to welcome him to this seminar as a moderator. So now let's go ahead and introduce the speaker of this seminar. The keynote speaker is Mr. Kamal Chaudhary. He is Mr. Kamal Chaudhary is a distinguished banker, and he has had a lot of experience in the banking sector. He has worked in London, in Hong Kong, Bangladesh, and in Africa in senior positions. He is also a successful businessman in London. Mr. Kamal Chaudhary is also an advisor of PRC. Thank you, sir, for your consent to present the keynote paper. Mr. Kamal Chaudhary, please go ahead and present your keynote speech.
Dr. Nilufar,
Yes.
let me take the chance of using just
Okay.
1 or 2 sentences
Okay, sure.
about Kamaluddin Chaudhary. I think I'm familiar with his name, and he is a veteran banker, now settled in London. So he has the blend of local and foreign experience. So we are going to harvest the lessons that he is deriving out of the experience of COVID-19. And I think his paper will definitely highlight our today's theme. So we look forward to his presentation. Thank you very much.
Thank you. Thank you so much. So let's have Mr. Kamal Chaudhary present his paper. Mr. Kamal Chaudhary, please go ahead.
What happened?
স্যার আপনার মাইক্রোফোনটা অন করতে হবে। ইউ আর নট অডিয়েবল, ইউ আর আনমিউট। স্যার আনমিউট ইউর মাইক্রোফোন।
What's it? Is it done?
জি স্যার, জি স্যার।
Yeah, okay.
So let me start by thanking our respected chairman, and also thanking the distinguished ladies and gentlemen. The presence here looks quite exciting. And my subject today is the impact of COVID-19 on the banking sector in particular in Bangladesh, and also the overall impact the pandemic has made on Bangladesh economy. The paper that I'm going to present, of course, based in London, I am the author, and also I've been supported and it's been co-authored by respected chairman, Dr. and Professor Akbaruddin Ahmed. Now, COVID-19 pandemic, as we all know, has forced the economic activities of the entire world to come to a halt. Bangladesh is not an exception. And thank God we are all around. Tawfiq Alam, can you hear me?
Yeah, we can hear you.
Okay.
Go ahead.
Okay. Now,
Yes, sir.
let me start by saying that COVID-19 crisis in Bangladesh has affected all the major drivers in the economy. While the government has proposed a large stimulus package of US dollar 13.8 billion, which is around 3.7% of the GDP, the success of this package will depend on the appropriateness of modalities and its implementation efficacy. It is important to note that a large part of the stimulus package is credit-based and through the banking sector, where all affected sectors like export-oriented companies, domestic market-oriented companies, and the SMEs can take loans at subsidized interest rate for underwriting their working capital needs and paying wages of their workers. We also know that Bangladesh banking sector has been experiencing difficulty or pressure in the liquidity system prior to the advent of this pandemic. So the additional burden of implementing the stimulus package through the banking system has put additional or more pressure on the already vulnerable banking sector of Bangladesh. The sector is faced with many institutional challenges that hinder the functioning of the financial sector at its full potential. There are weak regulations, regulatory budgetary support to underperforming state-owned banks, and of course, the rising non-performing loans are only a few to mention in the long list of institutional problems. Under the current scenario, banks have been offered very little incentive to operate the stimulus packages. If the banks were to take into consideration the cost of funds and administration costs, the incentive is very, very little. Therefore, many banks might not implement the packages with the speed and scale the emergent scenario warrants. However, against this backdrop, the major objective of the paper which we prepared is to understand how Bangladesh banking sector is implementing the COVID-19 related stimulus package, how or to assess the implications and implementation of the stimulus package on the health of the banking sector, like what kind of portfolio, the state of the portfolio, the profitability of the bank, the risk that the bank will have to undertake, and of course, the critical non-performing loans, and lastly, the governance. And also we will examine how effective has been the role of the central bank in supervisory role. And lastly, time permitting, I would also outline some recommended policy initiatives and measures towards the better functioning of the banking sector in Bangladesh. While going through this paper, first, I should also give you a brief account of the economic impacts of the COVID-19 in the economy. So let me start by saying, while Bangladesh has seen a delayed arrival of the COVID-19, with the first case detected back in March last year, with regard to its healthcare and economic preparedness, Bangladesh was caught off guard. The effect of COVID-19 on the economy of Bangladesh is especially pronounced because of the country's dependence on globalized foreign fashion brand supply chains and exports of human capital. We must stress that Bangladesh has two major sources of income. One comes from the export of the ready-made garments, and the other from the migrant workers that work around the world and send remittances into Bangladesh. So in general, and ready-made garments in particular, the banks in Bangladesh have significant exposure to these industries. And combined with the declining consumer economy, the effect on these industries had been really very hard. The economic impact was also felt in three main avenues. First, there was a decrease in domestic economic activity following the shutdown declared in March last year. And second, a decrease in ready-made clothing exports, which accounts for more than 80% of Bangladesh's exports. And these were heavily impacted by COVID-19. Overall exports decreased by 83%. I repeat, 83% it decreased year on year in April last year. And finally, there has been a decrease in Bangladeshi remittances, mostly from people residing in Middle Eastern countries, which is influenced not only by pandemic, but also by the drop in the oil prices. Bangladesh, as we know, is one of the most heavily populated countries. And controlling the effects of a pandemic like that of COVID-19 is certainly a very major challenge. Restricted health facilities poses another problem. In fact, the ability of the health system in Bangladesh has been put to test, and that needs substantial support from the development partners. As for ready-made garment exports, the pandemic has significantly damaged global clothing demand. Global clothing buyers have therefore either suspended or canceled orders from Bangladesh. And to mention, between April and May last year, a huge number of orders were canceled. And this totals equivalent to about $3.18 billion. So now that's a staggering figure. In April last year, export from ready-made garments dropped to US dollar 374 million, which is more than 85% lower than April the previous year, which is 2019. Sorry, sir. Most of these global brands are now reported to be returning, thankfully, and restating their orders. The growth of RMG exports in August 2020, which is last year, compared to that of August the previous year, 2019, was 2.58%. Furthermore, let me give you a brief overview of the banking sector in Bangladesh to understand how the negative impact it had impacted, the COVID-19 has impacted on the banking sector. After independence of Bangladesh in 1971, the banking industry in Bangladesh started journey with only 6 nationalized commercial banks, 3 state-owned specialized banks, and 9 foreign banks. But after several years of expansion, currently there are 60 plus, maybe 60 to 65 scheduled banks, of which 6 state-owned commercial banks, 42 private commercial banks, 9 commercial banks, and 3 specialized banks, and 5 non-scheduled banks. The scheduled banks are operated under the full control and supervision of the central bank. Although the number of banks did not increase drastically until 2013, the percentage share of the private commercial banks of the total industry asset has increased quite remarkably. The share of the private commercial banks in total industry asset was around 35% in 2001. Interestingly, by 2017, the share increased to 67%. Such an increase in share of industry asset is not a conundrum, as private commercial banks' share of deposits in the industry has also increased over the period of time. Therefore, in terms of the structure of banks, one can say that the private commercial banks in Bangladesh plays a very dominant role. Now let me give you a review of the stimulus packages, the packages that have been announced by the government. The COVID-19, as we know, has forced the economic activities of the world to come to a halt. To save the world from a devastating recession, different countries are announced or have announced different packages for various sectors. Like, for example, in the UK, there has been a tremendous support to the businesses. In the UK, the finance minister has given between 10 to 25,000 pounds grant to SMEs all around the country, just a grant, and so that they can pay off the rents to their landlord, they can pay off the workers who have been asked to go home. And also the government has provided furloughs to those who have been made to go home and sit down, the workers. The government has also waived the business rates. The government has also waived VAT. So there are a range of stimuluses that has been given in the UK. Likewise, the government of Bangladesh allotted some 13.8 billion US dollars under 22 packages to support the healthcare services, to protect jobs, and to support the poor and the vulnerable to tackle the impact of this pandemic, and also to achieve smooth recovery, economic recovery. Export-oriented industries, small, medium, and cottage industries, agriculture, fish farming, poultry, and livestock, etc., have been brought under these incentive packages. The allotted fund for stimulus packages is 3.7% of the GDP, which is, of course, a substantial amount. But based on UNESCO model, it has been estimated that to mitigate the socio-economic impacts, Bangladesh needs not 3.7, but much more. Bangladesh needs 11% of GDP as the fiscal stimulus, where 5% needed for economic revival, 3.5% needed for social protection, and 2.5% needed for public health infrastructure. This, therefore, shows that Bangladesh is far behind from the required scale of the stimulus package, sadly so. However, now let me tell you how it is being disbursed. These 22 packages, how these are being disbursed. Most of the packages are disbursed to the banking sector. It is important to note that a large part of the stimulus package is credit-based and wholly through the banking sector, where the affected sectors like export-oriented companies, domestic market-oriented companies, and SMEs can take loans at subsidized interest rates. What are these packages? Under most of these stimulus packages, I mentioned there are about 22 packages, the affected sector can take loans as working capital at a subsidized rate than the regular interest rate, subject, of course, to fulfilling certain terms and conditions laid by the central bank. And to list them all, 24, I will, in order to economize the time, I will not go into details. We could leave these for question and answer session. The 22 packages, namely like package for export-oriented industries, export development fund, package for large industries, package for SMEs, package for agriculture, and so forth and so on. There is also a great relief in the form of interest waiver that the central bank has provided. Then there is a social safety nets, which provides food and cash transfer to a number of people. And just to mention a little bit on that, safety nets, I would say that from the very beginning of the lockdown, the government has widened the social safety net coverage, and an incentive package of about 815 crore Bangladesh taka was announced for expanding the coverage of the allowance program, and about 1,250 crore Bangladesh taka cash aid has been disbursed to 5 million poor families. Each family has got about 2,500 taka, which is about $30, where directly the families benefited, as on an average 4 members have been counted in each of the 5 million families that the money has been disbursed. But however, it is not very clear to us as writers that all the families have actually received the cash support. Based on my understanding, they were not able to distribute These as it was difficult to identify a number of poor families. So this is another constraint, that to identify and to disburse money at that grassroots level was difficult. Now, let me tell you how this distribution is done, the distribution mechanism within the banking system. Nearly 80% of the stimulus package is in the form of repayable loan. The commercial banks have been given responsibility of distributing the loans. They are responsible not only for selecting their customers through their already existing bank customer relationship, but also ensuring that the customers pay back the money in time. Moreover, there are several conditions set by the central bank, such as maintaining a single borrower exposure limit, loan classification and provisioning rule, and the highest loan limit for both banks and clients. Also tied with this, there is a more critical and serious problem, and that was the problem of liquidity. As we all know that the stimulus packages with subsidized interest rates will be financed from the deposits of the banking sector. Now, this will have an adverse effect on the liquidity. As you finance it from the deposits of the banking sector, the deposits and the liquidity will get squeezed. And given the already difficult situation with non-performing loans, which has made things worse, there is a danger that this disbursement and implementation of these 22 packages may lead to potentially a long-term liquidity problem in the banking sector. However, in order to ease this liquidity in the banking sector and to support the stimulus schemes, the central bank has taken several steps by using the monetary policy tools. To mention these, number one, there is a downward revision of the mandatory cash reserve ratio by 150 basis points, which means from 5.5% to 4%. It reduced the cash reserve ratio by almost 1.5%, which would lift the bank's liquidity by a good amount of funds, about 18,000 crore. Second, the central bank has made an upward revision of the advanced deposit ratio by about 200 basis points, which means from 85 to 80, it has increased the ratio from 85 to 87%, and from 90 to 95% for the banks who are Sharia-based banks. So that this also helps the liquidity to be improved.
Mr. Kamal Chaudhary, may we know how much time is needed for you to complete your presentation?
Not much.
Okay.
I will be condensing
Just asking you for our mental preparation. Okay, please go ahead.
Not much. Can 7 to 10 minutes be all right?
Very good, very good.
Thank you. I'm going fast, and I leave a number of things because I'm addressing a very learned group of people, and so not going into many details, which we could leave it for questions and answers. I was mentioning the steps that the central bank has taken to help the liquidity, which is already under pressure. I mentioned that the mandatory cash reserve ratio was reduced from 5.5% to 4%. I mentioned that there was an upward revision of the advanced deposit ratio that was increased from 85 to 87% for conventional banks, and from 90 to 92% for Sharia-based banks. And this helps improve the liquidity. I should also mention that the central bank has slashed the repo rate by 75 basis points from 6% to 5.25% to make the borrowing of commercial banks from the central bank cheaper. So these are very, very helpful steps taken by the central bank. Now, I should also say that what is the implementation cost to the central bank, and as compared with the incentives that the banks, I mentioned that the incentive given by the bank is not very attractive or very little. and I mentioned that the banks may not implement this program with the enthusiasm that it warrants because of the lack of incentive. Because the cost of borrowing the funds by the banks is about 7 to 7.5% cost of borrowing. If the cost of borrowing is say 7.5%, and if the central bank has made it compulsory that the money should be lent at 9%, then the difference, which is the spread of income, is not attractive. As a banker, many of you will understand, because there is a cost to managing the funds and dispersing. So therefore, I think these packages, when the cost of administration is taken into account, these packages will not be very actively driven. Therefore, one will judge whether the program is effectively being disbursed or not. And I'm going to come to that, through the monitoring system. I must say that although good progress in disbursement of the packages for especially export-oriented industries, especially ready-made garment and large industries in the service sector has been observed, the stimulus packages for SMEs, agricultural sector, pre-shipment credit for exporters, and employment generation schemes sadly are yet to gather space. Experts say that relatively the complex disbursement process and the absence of the central bank's monitoring and supervision has slowed the disbursement of the packages. The implementation of the stimulus package does not reflect the enthusiasm with which it was announced. I mentioned that. Considering the nominal progress of the packages, the central bank has strengthened its supervision and monitoring of the loan disbursement. And the central bank has commissioned a team to monitor that under the supervision of a deputy governor. So that's a good step. Now, I'm driving you to a conclusion because so that we can economize the time. I would say, what is the recommendation as we as thinkers, what do we think and what we should recommend and what should be the way forward? First, I must say that the Central Bank of Bangladesh must be given credit because they've made a very timely and taken a much needed step to bring about this stimulus package. So credit can be given to the Central Bank of Bangladesh. But the questions remain how to mobilize this capital, how to use it. Apparently, it seems that the commercial banks have been burdened with all the liability. The commercial banks will screen their customers, will find their customers, identify their customers, take the whole risk, disburse the money, and also will take the risk of recovering the money and without having to have a security. There's no guarantee, there's no collateral. So there is also, this is potentially a very dangerous area because if the money is not recovered, then the liquidity will be in serious trouble. So the central bank, in order to ease the security, the liquidity crisis, will, in our opinion, will probably have to further decrease the cash reserve ratio and maybe have to even lower the statutory liquid ratio and repo rates. So this is something we think and the central bank will have to seriously consider going forward. Currently, we think that the Central Bank of Bangladesh has made an extraordinary measure introducing these packages. Other central bank of other countries are also taking the similar kind of measures. Despite the criticism which we have seen, some economists in the country are in the favor of the central bank's initiative. However, some are not, and they feel that the lion's share of the stimulus package was a repayable loan. This, in other words, create pressures on the liquidity support. It is the opinion of those that the liquidity that we are talking about may not be actual or the real issue. The real issue here, or the real problem, is how to get the money back. Because as I mentioned, there is no security or collateral. So how does the bank get the money back? It is our view that there has to be some mechanism in the form of a guarantee that the funds will be repaid in due course. In bringing this matter to a conclusion now, as I said, I will be brief. I would mention that lack of capacity and lack of efficiency of the public management system will remain a big challenge in Bangladesh because it harbors corruption. Whenever there is a question of disbursement of a large amount of money, as it is with these stimulus packages, there will always be people within and outside the public management system to take unfair advantage of it. Already, we have seen and seen in the media that there are reports of corrupt practices. We have also seen that there has been political interventions, and obviously, potentially this particular system is fraught or could be fraught with corruption. So, without proper transparency and accountability, one would find the package offered may not be very successful. Thus, we think there is a need for immediate formation of a national monitoring committee comprising representatives from the government, government agencies, NGOs, civil society, the business community, and labor organizations. I think with this conclusion and concluding remarks, again stressing transparency and accountability and good governance, I bring this paper presentation to an end. Ladies and gentlemen, thank you very much.
Thank you very much, Mr. Kamaluddin Chaudhary.
Kamal Chaudhary.
At the very initial stage that he is a veteran banker, having the blend of experience, I mean the local experience of Bangladesh, because definitely his family members are here in Bangladesh, and he is definitely receiving information also from them, and the dailies, and the national dailies and foreign dailies. So he has the access of information what is going on about the impact of COVID-19 on banking sector. So the focus is on banking sector. And let me comment that when we talk about bank, we definitely, the very image of money comes in our mind. So without money, there cannot be an investment. And when there is no investment, there is no productivity, there is no employment, and also there is a sociological impact that our newspapers say that divorce rate is increasing because of the COVID situation, because of the, lack of economic activities. This is sociological aspect of the unemployment situation springing from the lack of economic activities. So thank you very much once again. And I must also take the opportunity of thanking Professor Akbaruddin, because let me comment also that selectivity is an art, that he has selected the subject very current, up to date, and people are very much worried about what is really happening in the bank, because bank is the source of money, and money is the source of satisfaction and survival for all of us. Without banks, we cannot survive. Even a villager has a bank account. So that is the scenario. Let me cross the London territory boundary, and let us go also to I don't know how to pronounce Thi Thuy of Myanmar. Are you from
Vietnam? She's from Vietnam.
Vietnam. Okay, Vietnam. So let us listen to what is happening in Vietnam.
I think we have a lot more speakers before her. She's a discussant, so she will come later. So let's go to Mr. Hamidul Haq, who is our guest speaker.
Okay.
Guest of honor. Mr. Hamidul Haq, the guest of honor.
The guest of honor, yes. Mr. Hamidul Haq is a highly experienced banker, having retired as a managing director of the United Commercial Bank, Bangladesh. Presently, he is also working as a managing director of Credit Rating Agency of Bangladesh. So let us hear from him and what his experiences are in the banking sector in relevant to the topic we have today. Hamidul Haq, please go ahead.
Thank you very much. Actually, I'm one of those fellows who have some sort of an experience in both industrial financing as well as commercial banking. I joined initially PICIC. Some of you must have heard of this, Pakistan Industrial Credit and Investment Corporation. That was an industrial financing bank. Later, after independence, it became Bangladesh Shilponin সংস্থা, that is Bangladesh Industrial Credit Institution. Later on, after retiring from PSRS, I joined United Commercial Bank and I retired as the managing director of UCBL. Then I joined a credit rating agency of Bangladesh, particularly Mr. Syed Latif Muslim will know my chairman, Mr. Saidul Zaman. He's our chairman of RAB, and Mr. Matiul Islam. These are both CSPs. He's the vice chairman. They set up this company, and I was his managing director. I'm still his managing director, sorry. Okay, but I have some experience, good experience and bad experience, particularly in the, let me give you a short history of bad experience in the industrial sector. In the mid-70s, I was working at BSRS. Then the government decided to set up different economic zones in the country, like less developed and least developed and like that. And for each of these sectors, different sort of debt equity ratio was introduced. So what happened for the very least developed sector, least developed areas like Rajshahi and all those places, the government decided, or the banking sector was asked to give loans of a debt equity ratio of 80-20. And of that 20%, 10%, that is 50% of 20%, used to be unwritten by ICB, Industrial Investment Corporation of Bangladesh, and NID. Okay, that left behind another 10%. That was that 10% used to be given by the machinery suppliers as kickback. So what happened? The promoters did not have any stake in these projects at all. The first thing they did after getting a partial local currency loan was to buy a good car and take their families for foreign tours and all that. And the projects went sour. You have heard of directed credit has never been good. You know, Bikalpa Dhara introduced by Sonali Bank, that also failed. However, as I was saying, I'm sure the pandemic will definitely, it has adversely impacted the economy, per se the banking sector also. But at the same time, it's very surprising that the banking sector recently announced its operating profit for the quarter, which was quite healthy. It was quite good. But however, the banking sector definitely has been impacted, and probably the debt equity ratio or the bad debts will likely increase. But here, Bangladesh Bank or Central Bank, what they have done, they have redefined the policy of recognition of bad debts by, say, as much as 6 months. Previously, let me explain, previously, in case of industrial loan, one defaulted installment was a default, was recognized as a default. Now the industrial sector has been given 6 months to be recognized as a bad loan. You see, and for repayment of bad loans, they have been given 12 years. I don't know whether that is good or bad. I personally think, this is my personal view, this is not good for the banking sector. This will, a day will come, it's sort of like, you know, so much bad debt, why don't you just pull up the carpet and sweep it under the carpet and say everything is so clean, your slate is absolutely clean. This is what is going on. This is not very proper. Often I cannot say too much, but I don't know, I've been made a guest of honor, whatever it is. But I think this, from my experience, I noted down some points also. Let me just say that it's a good sign that the banks are trying to overcome the situation through digitalization and innovative services. This is a good thing. This is a outcome of this COVID, I think. Because previously, people used to physically go to the banks. Now they don't have to. To transfer money, you can use the big cash and whatever other methods and all that. From bank to bank, you can also transfer funds and that. You can. The lockdown has affected economic activities across the board, except for R&D sector. But the sectors that are badly affected are transport sector, hotels, tourism, and these are going to be very badly affected. I don't know how they'll come out of it. Maybe the government will have to give further stimulus and all that. In fact, you were talking about the stimulus also, Mr. Kamal Chaudhary. I know some people who were definitely at the, but they needed the stimulus. You know, it has not really reached them. The banks have been given the funds, but they have not disbursed it so far to the right people, the deserving people. This I've heard directly from some persons or some industrial people who have been badly affected, adversely affected. So this is what is going on. This should be looked into also. It is my personal opinion that the central bank's revised definition of classification loan is not very prudent. This I've already stated. Okay, likely bank solvency position may be affected in the long run. Central bank will have to play a key role in supervising and providing new guidelines to the banks. Banks may find it difficult to maintain minimum capital requirement, and most funding demands will have to be made through, I don't know, borrowings and all that. I think this is in a nutshell, this is my view on banking sector for COVID. But what we should be thinking really is what happens, what do we do post-COVID for the banking sector? There should be more expressions or studies on this matter. The day will come when, inshallah, the COVID will go away. After that, you see a lot of this sector, this banking sector will need a lot of initiation and investments and input of funds and all that. We'll have to think of that also, I think sooner or later. Thank you very much.
Okay, thank you, Mr. Hamidul Haq. I can recall your experience in the very big credit-giving agency of then East Pakistan and then now PSRS. You have a wide experience in credit provision to the industrial units of the country. So I remember that you had definitely the experience of that. Now I think next chance comes to another discussion that we have here.
You have to unmute, Mrs. Neelama. You have to unmute.
The next speaker is Mr. Mahmood Hussain. He is an MIS and IT engineer with experiences in managing financial institutions. So presently he is the managing director and CEO of Millennium Information Solution Limited. So I would like to invite Mr. Mahmood Hussain to say something within 10 minutes. Mr. Mahmood Hussain.
Bismillahirrahmanirrahim. Can I be heard?
Yes, sure.
Can you hear me?
Yes.
Okay. Honorable Session Chair, learned keynote speakers, veteran bankers, and respected participants. Assalamu alaikum. I'm delighted to be a part of this webinar today, where we are discussing.
Yeah, where is Mr. Mahmood Hussain?
Yes. Can I continue?
He's not there, Mr. Mahmood Hussain?
Yeah. Can't you hear me? Hello.
Yeah.
Assalamu alaikum. Can you hear me?
We can hear you.
Okay.
You got to unmute.
I think some of you can hear me, right?
Yeah, we can hear you. You are loud and clear. Please go ahead.
Okay. So I'm delighted to be part of this webinar today, where we're discussing
Please unmute.
the impact in banking industry. I have already unmuted. I don't know what happened. Brother Akbar, you should look at it. Look at your side.
We can hear you.
Okay. So let me tell in very brief
Where is
about
Mahmood Hussain?
our company and what we have been doing. Can't you see me? Sorry.
Mr. Mahmood Hussain is not there?
Yeah, I'm here. I think there.
So he's here. He's speaking.
Please
Can you not hear him?
unmute.
I did.
Unmute your speaker.
I did unmute my speaker. Okay. Let me continue then, right?
বলো তো unmute করতে। স্পিকারটা unmute করেন।
Sir, স্যার আমরা শুনতে পাচ্ছি কিন্তু আপনি শুনতে পাচ্ছেন না কেন?
Right. I don't know.
We can hear him.
Where is Mahmoud Hussain?
We can hear him. I don't know why you cannot hear. Something is wrong with your
System.
microphone.
Yes.
Your system.
He even cannot see me, so something is wrong there.
Wait, unmute করেন Mahmoud Hussain.
আমরা শুনতে পাচ্ছি স্যার, আমরা সবাই শুনতে পাচ্ছি, দেখতে পাচ্ছি।
He cannot hear. Let me continue then.
Okay, you go ahead.
Okay. We are Millennium Information
No, we can't listen.
Company. We have been.
Please unmute.
We have been in the industry for last 20 years. And what we have been doing for last 20 years, mostly we have been designing, developing, and deploying only Islamic Sharia-based total solution, A to Z, in the industry. Alhamdulillah, by now, we have 9 banks. They have been using our
Volume
system,
বাড়ানো যায় না?
and 2 NBFI, they are using our system. And some of the banks, they are only using our software, nothing else, A to Z, our systems. So we have some experience in this field. So that's why I think Brother Akbar selected me to talk about the impact of COVID in Islamic finance and banking. Since I'm in technology, Islamic banking solution business, I will try to highlight the impact of COVID in this area and with some probable remedy, through technology. Actually, the whole world has been experiencing devastating effects of pandemic for last 1.5 years. No one can deny the fact that except a few industries like healthcare and pharmaceuticals, delivery and shipping industries like Amazon or Foodpanda, some e-commerce industry, and some IT online solution provider, almost every other industry has been impacted greatly since the inception of the COVID. We cannot deny this fact. Countless joblessness and closing down of businesses have been taking place all over the world, whereas no one can predict where is it going to end. So now I will talk about a bit on Islamic finance industry and the impact of COVID on it. Talking about Islamic finance, in fact, the world started its journey 600 years ago with conventional banking industry, whereas Islamic banking system started coming into reality in early 70s only. So naturally, it is relatively a new phenomenon. In this devastating situation, being the part of the ecosystem, the impact of the pandemic has been influencing each and every banking industry as well as commercial, conventional, and Islamic banking. There has been a consistent growth in Islamic banking and finance all over the world. Brother, can you hear me now? I think Brother Akbar is the only one cannot hear, right?
Yeah, I think you better go ahead.
Okay,
I think he has got some personal problems.
Okay. So the growth of Islamic banking and finance has been phenomenal. It was approximately 70% before the pandemic. Still under this pandemic, the growth continued and it's around 13.4%. In Bangladesh, 26% of the banking activities is carrying on under this phenomenon of Islamic banking. And the government is providing nowadays, recently, they actually are concentrating on it and providing support. And if it continues, frankly speaking, within a very few years, you will see Islamic banking will be the mainstream in Bangladesh. That's for sure. The statistics says that. That's because 90% population is Muslim, and if option is given to them, either Islamic banking or conventional banking, and if Islamic banking can fulfill all the requirement of bankings, so it is a natural progression that people will be adopting Islamic banking rather than conventional banking. So it is likely, very likely, that within a few years, the whole world, actually the Bangladesh will be going towards Islamic banking for their mainstream banking. Okay. Now, even today, if you talk about today's statistics, Bangladesh has the highest penetration in the field of Islamic banking, especially in the field of Islamic microfinance. All over the world, Bangladesh has got the highest penetration, and the beauty is the recovery rate is more than 99%. It's phenomenal, unthinkable. And I think that's why, a lot of banks are opening up Islamic banking wing, and a number of banks, they're converting themselves into Islamic bankings. I am not going to tell in details about the way the Islamic banking works, because this is not the platform of doing it, but I'm just giving you some statistics regarding the growth. Okay. It's definitely an asset-backed system, and in 2009 and 8, when the whole world was going towards the gutter, I mean, regarding the financial system, only Islamic banking, because it was backed by real asset, was growing. And the Pope Paul himself, the Christian Pope Paul, he told to look into Islamic finance at that time. I think you all know about it. I'm not going to go in details in it. Let's talk about the how we can avoid this impact of COVID in Islamic banking. As a matter of fact, if business does not flourish, where and how financial institution can deploy its fund and do business and make profit? Although it is not the panacea, but going digital to complete virtual banking could address the problem for Islamic banks at a great length, meaning making all possible services at a great length, digitally, without having to go to the bank. And that is the future is coming. It's already happening all around us, and in Bangladesh is coming. It's called virtual banking. It means abolishing the requirement of customers having to go to the bank's premise at all, without having to go directly for direct interaction with the bankers. I think we can contain COVID at a great length. On the other hand, the cost of transaction could be minimized, which will lead to make a bank more profitable, definitely. Okay, now what can we expect from a full-fledged digital bank or virtual bank? Okay, I'll give you some example. Number one, digital onboarding, completing minimum eKYC, and opening account remotely without having to go to the bank. It's happening in Bangladesh already. Biometric as well as multi-factor authentication and validation through national centralized citizen database are being used here. Then number two, all types of fund transfers, inter and intra-bank, between same as well as different account holders are taking place right now in Bangladesh. Using mobile device and cards, you can make all sorts of payment. Applying for financing through uploading facilities of all required documents and getting notification as well as fund disbursement to the virtual account could be made.
Okay, Mr. Mahmoud Hussain, how much time is needed for you to complete?
I need, I think, 3 minutes more.
Okay, I think this is fine. Okay.
Okay. So credit rating agency online verifications are taking places for instant credit rating, and that's being required for financing. And through digital banking is possible. I think our honorable Mr. Hamidul Haq's organization could be of use here. For corporate banking like trade finance, one can throw their letter of credit directly from their office premise, and they can start getting the status of their LC progress through SMS and through email with documentation as well. All sorts of bills payment, credit card payments, mobile top-ups, sending money to Bcash and M-Pesa is happening. So there is no need for physical banking in near future. Okay. Now at the end, I would like to give some example in digital banking area where the world is going and where Bangladesh is. The Zurich Capital Funds Group launched the first Islamic Sharia Bank in Dubai in last April 2021. A few more are in progress for digital banking, means total virtual banking. Saudi Arabia hands over 2 digital banking licenses recently. Malaysia invited application by June 30, 2021 to give 5 licenses, and 2-3 of these licenses are likely to be Sharia banks. Singapore up to 5 licenses for digital banking. Pakistan already made a study by PwC to set digital bank, for virtual banking. Bangladesh is evaluating to give permission to convert brick and mortar banks into virtual bank very soon. So these all processes are accelerated to take place because of the impact of pandemic actually. Now, last but not the least, I'd like to say, despite a very uncertain global situation ahead of us, the Islamic banks accelerate in adopting digital transformation, and eventually, if they try to become virtual banks, they can avoid the adverse impact of COVID at a greater extent and rather be more profitable in the long run. Thank you very much. I have some slides, but I will avoid because probably I have taken more time that was allocated to me. Thank you.
Thank you, Mahmoud Sen. I think you have added one new dimension to the whole discussion, which is Islamic banking system, how Islamic banking is contributing and how it is dealing with the COVID situation through their provision of funds. For example, there is a myth that Islamic bank is not so much alive to the question of women. Providing credit or grant to women. This is not true. The Islamic banking. Hello.
What's going on?
It's going on.
What's happening?
Something is. I think can you hear me?
We can hear you, but we can't see each other anymore.
Yeah, I find some slides that are being displayed.
Yeah.
I don't know why this slide here. Anyway, let me cover my point. Adding the dimension that women are coming out and they are participating in economic activities and they are earning and subsidizing their own household in their income and facing the crisis situation. So this is one aspect of the Islamic banking system. And there are some people here in our country being Islamic bent of mind or faith that they don't like to enjoy any interest and they don't like to extend loan on the basis of interest. So interest-free loan is being provided or extended to those women who are affected by COVID situation. And I think this is a very good dimension that Mahmoud Hussain has already mentioned. Thank you very much for that. And let me, for preparation of the paper presenter, that there is a paradoxical situation that is prevailing in the whole country and maybe in the whole world, that borrowers are not investing money, and the banking units are not receiving money. So this is a paradoxical situation that is being posed by the COVID situation. So this paradox, how can this paradox be resolved, that borrowers are not depositing money and bank cannot invest money in the investment sectors? This is a kind of paradox is going on in the whole country and maybe in the whole world. So if there is no other discussion, can we shift to Vietnam?
I think we have another speaker, some more speakers before the Vietnam issue, because she's going to discuss later on. So we have Professor.
Let me clarify why I'm interested in Vietnam particularly, or we are interested, because the name of Vietnam is not being heard in the newspaper. I think Vietnam has been coping the situation quite well. And because this is the green country, whether the green and greenery and ecology has anything to contribute to
I think Dr. Nakib, let's hear Dr. Sabira Islam first, and then we'll go to Vietnam, okay?
Okay.
So our next speaker is Professor Sabira Islam, and she is an economist, and she's working in Assam University, in Royal Global University, Assam. Okay, Dr. Sabira Islam, please go ahead with your speech.
Good evening to everybody and assalamu alaikum. Am I audible? Am I audible?
Yes, we can hear you.
Yeah. First of all, I would just like to tell you that my name is Swabera, not Sabera. Swabera comes from the word Sabar Karna. So I'm SWABERA. I heard a lot of eminent, bankers, people connected to the bank speak. And I'm a little apprehensive about my meager knowledge on banking. First of all, let me tell you that I retired as a principal in a college a few years ago, and I'm re-employed in the Royal Global University, which is a private university. Earlier, I was in a government college, and the private university, I teach economics, and because of the pandemic or whatever, we have so many webinars, I can't tell you how many. In fact, I just exited from one and came into this just now. And the last one, Professor Akbaruddin will be interested in knowing. We were actually discussing about the study on Indo-Bangladesh trade barriers. We've been asked to make a study, the government. We've been asked to make a study about the barriers to trade between India and Bangladesh. And we had a discussion. It is very difficult, really. Difficult meaning, to come to to give any kind of solutions to anything. Now, let me come to since we are talking about banking, and I've already told you that my knowledge is just textbook knowledge. However, from my experience, I can say some things. Now, what happened was we are all talking about the pandemic, and we know that the small people working in the unorganized sector, the people who belong to the micro industries, I mean those who work in those, these kind of people have kind of just lost their income. In fact, from yesterday till today, there was a plumber who was worrying me so much every day, who would say, I don't have any work, give me something. I'll return the money when I'll do some work for you. So he was Because he was calling so many times, I said, okay. Then again in the evening, the Junab who tutored my children to learn Quran Sharif, he came and I knew what he came for. So again I gave. Then today another person came with the same story that see, we just don't have any money. I mean, there's no work for plumbers, for carpenters, for electricians, these kind of things. But however, the government is trying to, solve these kind of problems. This time, after the second wave started, the government or the bankers rather are in a better position. However, these poor people who I mentioned to you, they will not have the courage to avail the opportunities which have been offered by the bank. In India, we have about 34 banks, out of which 12 are public sector and the rest 22 are private sector banks. Now, these private sector banks are actually, since they work for profit, they are, a better cushion. But the public sector banks, they have been given the freedom to give loans or to give concessions. I will come to the exact, kind of point to that. But first of all, what I want to tell you is because last year was such a bad year for us, this year the government and the RBI, they were better prepared. They were better prepared, and as part of the stimulus package, the RBI has allowed the banks to lend money to hospitals, manufacturers of medical equipment, medicines, importers and sellers of vaccines, oxygen cylinders, medical, anything to do with medicine. So, in this sector, the government has been very lenient. They have been, they have allowed the banks to give them loans and at a very low rate of interest, and also they've been given quite a long time for repayment of the loans. Similarly, the public sector banks have been allowed to give unsecured loans. Unsecured loans, I think around 5 lakhs to victims of the family members who suffered from COVID. And here also, the repayment tenure has been extended to 5 years. So there's been a lot of concessions given to the industry, to the public, and I mean, most of the MSMEs, which were actually the largest employment generators, they were suffering. They were suffering, and so the government has now allowed them the freedom for waiver of some, not exactly waiver, but concession, and for repayment of loans. Earlier, there were so many hurdles that an individual has to overcome to transact any kind of business with banks. But 2020 has taught us a very bitter lesson. And this time we have been able to cope with the pandemic better. Of course, I gave you an example of the 3 poor people who had come to me. They are all used to living a comfortable life, earning around at least 15 to 20,000 rupees a month. Not the Junab, not the person who goes around tutoring people, children, not him. But on an average, and these kind of laborers, skilled laborers who uh, were working individually, they could earn around 15 to 20,000 maybe if they were very hardworking. But they have all lost that income, and so that because the schools, I mean, government has actually encouraged online teaching. So even in the schools, the owners of private schools, they are having problems because the parents are not being able to afford to pay the fees. Now, these owners also are dependent on banks for the loans which they have taken. So here too, the government has given a concession in the educational sector so that, I mean, some relief can be given somewhere. In a university like the one where I work, they're very rich. We have the state of the art kind of, I don't know what the phrase is, like, centrally air conditioned and very high fees, 32 departments. So in universities like ours, the children are able to pay the fees. But in people from the rural areas or who go to the colleges, public colleges, schools in the rural, semi-urban areas, although the education is free till 18, they are, they don't want to spend that little extra amount for education because they were getting it free earlier. It was all subsidized. Now they're having problems. From where will they be able to buy a smartphone, or from where will they be able to buy a laptop? Now, again, if we talk about digitalization of the economy in every sphere. They're trying e-governance, and of course, we are quite digitalized, I guess, now. The people who are from the lower middle income group, they've actually their incomes have gone down, and although the government is trying to help them with these stimulus packages through the banks, and perhaps some of them are coming out of it, but it is sure to take, the Indian economy is sure to take a beating. Last year, the growth came down to quite a large extent. I may be excused for not being exact or precise because I come from a different country. However, I must say that where I stay in Assam. I'm from Guwahati, the northeastern part of India. We are supposed to be, our borders with Bangladesh are common. So we here in the northeast, we face network issues. We face a lot of connectivity issues because the mainland is connected to us by only a small stretch of land of 22 kilometers, which is called Chicken's Neck, for which we are now trying so hard to get access to the ports through Bangladesh and then go to Calcutta or, Southeast Asia, because Myanmar is closed. So because of these kind of reasons, the northeast region of India, I guess some concessions have been given to us in terms of internet connectivity, in terms of digitalization, and the banks are becoming people friendly. Transaction costs are coming down because, in fact, we've been advised to, do everything from home. But I do feel scared to ask, take a transfer of 1 lakh rupees or something. No, I don't want to do that, and because I'm still not that tech savvy, although my children can do it. So all in all, what I can say is that the RBI, the governor of the Reserve Bank of India, he is monitoring the economy very well, and he is taking each sector, individually, meaning the same policy will not apply to everybody. So, of course, a lot of it depends upon the strength of their political leaders of that particular state. But the RBI, the monetary policy is through the monetary policy, it is like the expansionary policy, which will lead to inflation, and then again, so on and so forth. Along with it should be the fiscal policy. I mean, those of us who did economics, I mean, we all know that monetary policy alone is not enough. But again, fiscal policy is also there, and control of the quantity of money floating should also be there. But at the moment, I think the injecting of money into the market is the policy which is being taken in India, because we were growing, and although the last 4 or 5 years, the growth was slowing down for many reasons, many reasons. But last year we took such a beating. It was really bad. And now almost everybody is of the opinion that the central bank is a kind of a, what should I say? They are the ones who can give solutions to us, because many banks have been instructed to waiver loans, especially in the the microfinance area, which was that model came out of Bangladesh. It's very successfully carried out by a lot of women in my state, at least. A lot of women have self-help groups, and they take these micro loans, and they are sustaining their lives very well. And so these kind of units are going to get a lot of relief. And those enterprises where the investment was only 5 lakhs, even they are going to get relief. But the large and medium scale may be getting a temporary relief, but in the at the end of the day, they will have to, because I mean, we can't just let things slide. So the government in India at the moment, I think, as we are all getting our salaries, that's an example. The people in the organized sector, everybody is getting their salaries. Nobody can complain. It's only the people in the unorganized sector and people who worked in the small and micro industries, they were the ones who lost their jobs. The people who were, laborers and who were not connected to any formal entity, who were working on their own, these are the people who have lost their incomes. And that is a sad story. And fortunately, very fortunately, the government has taken account of all this. And I want to give a a personal example. Like here in Guwahati, we have a lot of people who are donating huge sums to the Chief Minister's fund for COVID relief. Huge sums, not small sums. And like people like us, we have formed groups where every day about 50 packets of food are I mean, we have young girls. I don't do it anyway. I'm too old, but I know about it. I mean, I'm part of it. So, these kind of relief measures have been taken into consideration. And in any case, we have to pay zakat. So for me, it makes no difference. So the people have been very kind to the people who are underprivileged, and I must say that whatever I mean, although we are in a lockdown, we are not allowed to go out after a certain time. I think I think it's not a bad idea because the number of cases here are coming down. And recently there was a talk of India going short on vaccines, but that has been replenished, and all the hospitals, private or public, wherever these COVID centers are giving treatment free in all the towns. The COVID centers are very hygienic. Quite a few of my relatives, two of them died anyway. Quite a few of my relatives were treated in the COVID centers where the the
Islam, I
facilities,
think.
the infrastructure, everything was very good because the government gave. Yes, ma'am, I'm just winding up because that amount of loan, unsecured loan, was given to these areas. So I think and hope that the whole world, comes out of this pandemic again. Although we are talking about a third wave, I don't know really, and probably by that time the Reserve Bank of India may change their policies again. I don't know. At the moment, we are going in for a expansionary monetary policy. Thank you very much.
Unmute. Please unmute your microphone, Dr. Nakib.
Yeah. Before we go to Vietnam, I have a question. I mean, out of curiosity to you, I have the memory that you are a regular participant of whatever, intellectual exercise and workshop seminar is being floated by PRC. Thank you very much for your participation. The question is, I mean, you are better than well off. I mean, more than Delhi. What is the trick and what is the secret behind it?
May I know who was talking just now?
Dr. Syed Nakib, Muslim.
Yeah, I'm known as Dr. Nakib. Yeah, please.
Yeah. So, Dr. Nakib, you wanted to know why I'm working, or did you want to know that? What was your question, really?
No, my question is, what is the secret that you are better than Delhi in terms of COVID situation?
Better than? Oh, you mean in Assam?
Yeah, how you're dealing with that?
You're talking about Assam? No,
Yeah,
no, no.
I mean, your handling or treatment is better. What is
no, no. Listen, there are about 6 states where the pandemic is very bad, but here also the cases every day are more than 2.5%. It was about 6 or 7% about a month ago. Now it's come down, and our chief minister, who is also the health minister, he said that still the rate of COVID, what's it called? I mean, the positivity doesn't come down till to 2%. We will not open up any institution. Now in Assam at the moment it's 2.4 or 2.5, and just today the standard operating procedures have come out that people who have had the vaccinations will have to attend to their duties, and the curfew will again start from 5. Now those of us who are over 65, we don't have to go, we can work from home. But if you think that the COVID situation in Assam is better, no, it's not. It's not. There's been a lot of, actually last year, probably because of mismanagement, the numbers were so high, even this time. But suddenly I find, of course, quite a large number of people have been vaccinated. And suddenly I find that things are I mean, we are hearing less cases. We are hearing that some COVID centers have, vacant seats. People were just lying in the verandas because they had to go to the hospital for oxygen. It went the rate was so high at one time. For about 2-3 weeks, it was just raging. The pandemic was absolutely everywhere, and now I think it is coming down. However, I think some other northeastern states, they are not doing well. They are still above 4%. I think Mizoram.
Okay, Dr. Sabera,
Yeah.
before we switch over to our Vietnamese participant, let me sensitize our very humble and modest participant Zain Khan. I remember that he's a very silent and non-disturbing participant, but I think he has some messages. Please get mentally prepared after we hear the representative from Vietnam.
Where is the message?
Okay, let's introduce Ms. T from Vietnam. She is the lecturer of Vietnam National University, Hanoi, and she is involved in the Faculty of Political Science. Ms. T is a very jolly good person. So will you please go ahead and discuss about the situation of COVID and banking system in Vietnam? Please unmute your microphone, Misty. Please unmute your microphone.
Yeah, we don't either see or hear the Vietnamese participant.
We can see.
No vision and no audition.
I can see, but I cannot hear. Misty, can you please unmute the microphone?
Okay. Can you hear me?
Yeah, now it's clear. We can see and we can hear.
Okay, thank you very much. Thank you very much. And thank you for giving me a chance to speak today.
I think you have only 10 minutes, okay?
Yeah. Can you see my slide?
Yes, ma'am.
Yeah, because yeah, it's too late. It's late right now, and I wish I could sing a song, but I will try my best to speak very shortly. Today I talk about the impact of COVID-19 on the banking sector in Vietnam. Very briefly, in Vietnam, the COVID epidemic was officially recorded from the beginning of February 2020. And as this day, as June 27 of 2021, Vietnam has had 15,400 infected cases, and that's only 76 people died. And in Vietnam tries to achieve zero to both controlling the epidemic and growing the economy. That's the reason in 2020, Vietnam economic has one of the highest growth rate of the world, reaching 2.9%. And and focus on the banking system adaptation in the context of the COVID-19 epidemic. And I think I would like to say, firstly, the banking system shares the difficulties support business development together because the COVID-19 pandemic has affected all sectors of the economy, with the most hit industry being transport service, garment and footwear, tourism, restaurant and hotel. So according to the statistic office in 2020, nearly 1,700 enterprise in Vietnam stopped operation, and it means that, oh, I think that in my internet connection is not. Can you hear me?
Yeah, I can hear.
Yeah. So every month around 8,500 business withdrew from the market. In the survey of the World Bank and Vietnam Chamber of Commerce and Industry, so 87% of surveys enterprises that they were affected very deeply from the COVID-19, and only 11% of the business are not affected. And nearly just only 2% of the enterprise are still doing well. So I think that's the reason that the bank sector have a support for the enterprise. And the second, I think that secondly is a celebrating credit growth in association with quality control and bad habit handling. I'm sorry, here is a bad habit means a non-performing loan. So total payment, as the State Bank of Vietnam oriented that the total mean payment will increase by 12%. So credit growth is about 12%. So the whole bank system was a hand 557,000 million Vietnam dong of non-performing loans. So I think it's just a support from the state bank and the government for that. And it's very surprising for me, for researcher, because also the COVID-19 influenced so much to the social life. But in 2020, there was a stretching net profit margin, diversify revenues sources, and being flexible in cost. That's the reason many banks in Vietnam, as you can see here, some names of bank in Vietnam, Vietcombank or Vietinbank, or Agribank and ND Bank, and so on. And they got very impressive profits in 2020. And many banks with make trillion of the Vietnamese in profits, and mainly due to the fact that they have cleverly applied the profit making formula, including stretching net profit margin. You can see here stretching is NIM and diversity, divide revenue sources, and flexible expenses coming in. So before, in the past, credit account for 90 to 95% of the total revenue of profits. But in 2020, and the bank in Vietnam reduced proportion of lending, that's only 70 to 80%. So they keep the profit very well. And yeah, to the past two, I would like to raise some problem for buying into 2021. And I think that the first issue here is pressure to increase deposit interest rates and reduce the land risk. Because it's a forecast that in 2020, the bank output and input interest rate bank may narrow, and the pressure on deposit interest rate may increase again, while banks still have to keep lending rates. It means that and each end of them is narrow, so it's pressure on deposit interest rate may increase. So I think it's a first pressure. And the second is apply digital technology to complete and maintain package and to just share and expand business. Because now you can see in Bangladesh or in Vietnam or everywhere is a competition from finance technology company such as
No, I can see all the guys.
okay. I say just only one slide more. So mobile payment service and telecommunication business. So it's a promotion education small formation in banking activity. Yeah. And the third, I think is narrows the gap between the deposit growth and credit growth. And bank need to have appreciate and time solution to bring capital to capitation customer, and they focus on the private customer, of course, because the non-performing loan is very low for the private customer, and borrower with outstanding loan accounting for larger proportion in most banks in 2020. But the bad debt or is a non-performing loan is always low below 1%. And yeah, and thank you very much. And I listened very carefully the presentation today, and I learned so much from you, and thank you very much. I stop my presentation right now.
Okay, thank you, representative from Vietnam. I have a comment on your presentation. The last slide that you showed, that it suggests that you are not experiencing bad debt in comparison to many third world countries. The volume of bad debt is increasing because of the COVID situation, but you are handling it quite creatively. And this is the credit. That credit goes to Vietnam authority, the government. And I have a question to you, that when I had the chance to visit Vietnam, and I discovered that you have very comprehensive wide forest areas. I mean, full of green people, and you produce mangoes throughout the year. So you have a lot of fruits, vegetables. Is there any link between vegetation, ecology, and low COVID-19 situation?
Probably.
Could you follow me question?
Yeah. I think that is I think it's one of the reasons also Vietnam control the COVID situation rather well is because of the political system, especially work rather well here. Yeah, as you can see that we control very strictly. And yeah, when we find out the COVID cases in some way, so we immediately quarantine. And so because we try to keep the durable control the pandemic, COVID pandemic, and we also keep the economic development. So I think that's one reason is made to succeed in Vietnam.
Okay, and there is another comment that I want to hear your comment on my comment or observation, that in many countries, including our countries, rich people are dying. more than the poor people? Is there any link, I mean, any scientific basis? Why rich people are dying more and the poor people are surviving somehow? What may be the possible reason behind that?
Unmute, please.
Thank you.
Could you follow my question?
Yeah, I think I cannot follow your question. Can you repeat again, or you can take for me?
My very simple way, let me put it, let me repeat, that there is an observation, I mean, drawing room discussion that rich people are dying more than the poor people. Is there any link?
Yeah, but I think it's a different in Vietnam. It's a COVID cases is not different between the rich people and the poor people, because the medical system work very well from the grassroots local. So if you can see that in Vietnam, that until now, that's only 76 people are died right now because of the COVID-19. So because of the healthcare system here work very well, and it can control that.
Okay.
It's so no different between the rich and the poor people.
I see. Okay.
From my opinion.
So I think there is no scientific analysis. I mean, irrespective of economic condition of the people, I mean, the COVID doesn't recognize who is rich and who is poor. So, it can attack any people. I mean, because of the infection, because of the environment. Maybe you are right. But whatever you have discussed, I mean, now, can we hear Mr. Zain Khan?
Yes, I think we'll call upon Mr. Zainuddin Khan. He began his career with the tea industry, both locally and internationally. He's a qualified physiotherapist and a counselor. So let Mr. Khan please go ahead and give your views on the paper that we've been discussing. Mr. Khan, please.
Bismillahirrahmanirrahim. Chairman, Professor Akbaruddin Ahmed, Director Research, Dr. Nilufar Karim, organizers, distinguished speakers and guests. Assalamu alaikum and good evening to you all.
You have only 7 minutes.
I would like to thank you all for inviting me to this August forum. I will try my best to make my humble contribution. I am not a banker. I am basically a business executive with years of experience in tea business. Incidentally, I spent 6 years in Chittagong as well. My second profession is of psychotherapist involved in counseling of people for psychological and emotional issues. Now to impact of COVID-19 on banking sector of Pakistan. Pakistan made a humble start in 1947 with no central bank. Habib Bank, established in 1941, filled the gap initially till the State Bank of Pakistan was set up in 1948. Slowly and gradually, other private banks, namely National Bank, Allied Bank, United Bank, and Muslim Commercial Bank, and some other came into the field with strong support of the central bank. By the year 1973, commercial banking grew favorably, and in fact, Pakistan banks were rated quite high in the region, as they had introduced modern technology like using computer available at that time. In 1974, Pakistan decided to nationalize all banks, which meant government control over the management and activities of the banks. However, the business went on as usual, but inefficiency, corruption, and bad debt increased. in my opinion, the only positive point that emerged out of nationalization was that the banks spread to rural areas which had no banking facilities earlier. Small traders and businessmen benefited and they grew in large numbers. Although in 1991, the Bank Nationalization Act was amended and 23 banks were established, and nationalized banks slowly started going towards private operators. By 1997, we had 21 domestic banks and 27 foreign banks competing with each other. Although there is a long journey ahead, banking in Pakistan is very vibrant. Besides commercial banks, we have agriculture banks, microfinance banks, and women banks. We have flourishing Islamic banking forming its root. Debit card, credit card, ATM, and online business are fully in operation. Here are some of the figures I have. Number of banks and DFIs in Pakistan are 50, total 53. Number of branches, 16,076. ATMs, 15,250. Total accounts, 57,000. Population, approximately 220 million. Penetration rate is 26%. Sources are State Bank of Pakistan. COVID-19 done enormous damage to all businesses. However, it has not impacted the banking sector so negatively in Pakistan. About 50% of the restaurants and food businesses have closed down. With frequent lockdown and shorter hours, all retail shops are under pressure. However, we have been fortunate compared to many other countries, and we have not suffered so badly. Interestingly, with various benefits given to the people and the businesses by the government of Pakistan, and that these funds passing through banking channel, our banking sector has made more profits this year than the previous year. Further increase in online transactions, excuse me, and advancement of the e-business have also contributed positively. Total deposits have improved by 16.5% over 1 year to park rupees 17 trillion in January 2021, as majority of the business and household saved maximum amount to fight the unforeseen challenges of the COVID-19 pandemic. Another reason for increase in the money in the bank is people not going for Hajj and Umrah, not taking holidays, restricted expenses on marriages, and almost 100,000 students who go every year to study abroad could not go. Bank deposits stood at 14.67 trillion in the end of January 20, as reported by the State Bank of Pakistan. Looking at these figures remind me of the famous saying that in the midst of every crisis lies great opportunity. Thank you all.
Mr. Zain Khan, thank you very much for putting up a very picturesque scenario prevailing in Pakistan following COVID-19. And you have mentioned about a number of banks operating in your country, but I wonder, you have not mentioned the name of Habib Bank. You know, Habib Bank, we have been hearing about this bank since our childhood days. You know, it's a very symbol of very good bank institution, financial institution. I mean, it is known to almost even a child that Habib Bank is there.
Yes, sir. But I mentioned right in the beginning
Yes, you did.
that Habib Bank actually played the main role because we had no central bank. And right from the very beginning, I said that Habib Bank was the main one.
Yes, sir. You did it at the beginning. Yes.
Oh,
At the
okay.
beginning,
Okay,
I said,
I missed it somehow. Maybe for electronic reason, I missed it. Thank you very much for putting up a very informative, presentation vis-a-vis what is happening in Pakistan. So now, can we?
Yes, let's go to the next person. But
Yeah.
Mr. Mahmood Hussain has a question. Mr. Mahmood Hussain, do you have a question? You raised your hand.
Yeah. I had a question earlier to the participant. I think Nagian Thai.
Shall we go at the end? Can we go at the end?
We can do that. We can do that. Yes.
Okay. So let's.
You have to unmute. Dr. Nilufar, you have to unmute.
Dr. Adil Nanda is from Kashmir. He is the postdoctoral fellow of the Department of Geography, University of Kashmir, Srinagar. And his research interests are disaster management, watershed studies, environmental geography, and remote sensing and GIS. So Dr. Adil Nanda, please can you go ahead and give your presentation in 5 minutes only. Is Dr. Adil Nanda around?
And we're not seeing the Adil Nanda.
Oh. Okay, I'm sorry. Okay. Go ahead and go to the next speaker, Mr. Latif from Bangladesh. Latif Mahmood from Bangladesh. He is a lecturer at the University of World University. It's called the World University of Bangladesh. And let's hear from him about the COVID situation and what he has to say about the banking sector in relation to the banking sector. Okay, Mr. Latif, please.
Okay, thank you. I'd like to thank Policy Research Center, BD, an independent civil society think tank for arranging such a contemporary international conference on banking sector. Okay, the lockdown to prevent the spread of COVID-19 has stopped economic activity across many sectors with important consequences for farms and households. Farms relying on direct customer contact, such as hospitality management and the transport, are losing revenue sources, and households working in these sectors are losing employment income. Like the economy of other countries, the banking sector plays a vital role to the national economy in Bangladesh. It contributes to many arms of economy like agriculture, industry, power, transport, trade, and service. However, the banking sector of Bangladesh as a whole has been struggling to survive in the last couple of years. Most of the banks are in trouble regarding loan default, high non-performing loans, and other issues. And the pandemic situation has made the situation worse for the whole economy. And Bangladesh has also lost huge export earnings, and its pace of internal production has been reduced significantly due to a long country-wide lockdown. And we are worried that from today, Bangladesh is going to have a lockdown. And now I will discuss the excess liquidity. The amount of excess liquidity in the banking sector rose every month last year, 2020, due to lower credit demand and expansionary monetary policy announced by the Central Bank of Bangladesh. And the central bank is also injecting funds to the financial sector with the stimulus packages. And excess liquidity is also a sign that the demand for loans is low, which is likely since the real economy is still experiencing the impacts of COVID-19 shock. However, surplus liquidity in the banking sector, which began to decline from January earlier this year, continued its dip in March 2021, despite slow credit demand. And another thing is that the drastic fall of deposit rate in recent times and government's decision to use surplus funds belonging to state-owned organization might be the reason behind the falling surplus liquidity in the banking sector. And however, the number of investment options in Bangladesh is very limited, we know. So in cases where bank offers a lower interest rate for savings than its inflation rate, people can either go for savings certificate or invest in the stock market. And we know stock market is a risk-averse sector. And now important point is that in the fiscal year 2021 and 2022, the government is going to depend on banks again to meet a major portion of the budget deficit, which is not a wise to depend more on banks for deficit finance. We can go for external sources than internal sources. Now, non-performing loan, because of coronavirus, the economy has come to sudden halt. This is likely to bring about high levels of non-performing loans, and high levels of non-performing loans are problematic because they impair bank balance sheet, depress credit growth, and delay economic recovery. We know that Bangladesh Bank has announced a series of policies and prudential measures from the very beginning of the pandemic situation. And we need to address the above measures announced by Bangladesh Bank effectively, and we need to take a comprehensive plan to tackle rising NPL across the globe, as well as Bangladesh is essential to deal with the consequences of the COVID-19 shock. And we must learn from the lessons of the past economic slowdown in the world to make the economic recovery as robust and fast as can be. And we know the banking sector has been negatively affected by the pandemic. It is also critical for economic recovery. However, the crisis will strengthen competitive pressures on banks by accelerating trends towards digitalization and new financial service providers. And finally, it can be said that problem of banking sector is widespread and is not related to the banking system only. The regulatory entity should be independent but accountable, and prudential regulation should be limited to deposit-taking institutions and should be clearly separated from non-prudential regulation. Thank you all.
Thank you. Now we switch over to one gentleman who has been very patiently and passionately listening. I can observe. He's an army person, Colonel Ashraf. I think he has some insights. Maybe may not be from the army point of view, but he has his own observation. Maybe as an investor, maybe as a borrower, whatever may be the situation.
Yes.
The Colonel.
Okay. Yes, I'd like to introduce Mr. Colonel Ashraf. He's an advisor of PRC and also is a member of many international and national organizations. He's a teacher by profession after he left his army, or probably while he was in the army also. He had been the principal of a number of English medium schools. And recently he's completed his MPhil degree. Colonel Ashraf has been very dedicated to the school studies and especially towards psychological education for children. So Mr. Ashraf, please go ahead and give your views, your very eloquent discussions, but I will give you only 5 minutes.
Yeah, thank you very much. Thank you. Assalamu alaikum wa rahmatullah. It's true. The last speaker is like the speaker after dinner. In the army, we say that the most unwelcomed speaker is the speaker after dinner, because everybody wants to, you better shut up and let us go. So anyway, but Actually, Dr. Akbaruddin Ahmed is our mentor, and he wanted me to give some comments, and that's all. Actually, I will first thank Mr. Kamal Chaudhary for presenting a wonderful paper, and he has left no stone unturned about the rampant situation in the banking sector happening. Bank being is linked to the survival of the people in our country. This sector has been totally devastated. Let me summarize his words: lack of transparency and accountability, lack of capacity, lack of efficient management, lack of trust, and rampant corruption. What is left? Alhamdulillah, good. But still, we want to, fight back. That is fine, no problem. We are hopeful people. Actually, here in this point, I'll thank the ex-principal and Professor Sabra Islam from Guwahati, because she is the only principal, and I am another principal around. All others here are either professors or senior executives of the business. In fact, from the starting of the pandemic, we have started saying something like new normal, leaving the old normal. So, and we have found from the presentation of different experts saying that the banking system has become online banking, and it has become easy. People has adapted to it. It's good. It's a new normal, nothing else. Only thing, the pandemic has touched every sector of life. So education, the SME, agriculture, whatnot, and particularly those who are low income people. I do not know how about the banking, but then the incentive or safety net has to be provided for all these sectors. I, being an educationist, I'll say that the government must, from their central reserve, from the central bank, should provide some safety net for the teachers, low paid teachers, and the schools or colleges which are private and getting shut down just because they cannot pay the house rent, because there is no student, there is no tuition fee, they cannot pay the school, and they cannot even pay the house rent and water bill or electricity bill. So to save these institutions, the government can, I had a elaborate presentation on this, and I have shown that it is not more than, around 8 lakh teachers of, the private primary schools and then private English medium school and madrasas. The teachers, those who are earning less than getting the pay salary of around 20,000 taka. From that, they have to pay everything, the house rent and the family sustenance and everything. Whereas suddenly, for last 1.5 years, they are not getting these things. Now, how they will survive? A lot of teachers are selling things on the street. You got to take care of them. Now, we have a rough calculation. It will not take much if the government goes for providing, and I mean, keep these teachers, low-paid teachers, on the track, and the schools which are getting shut down just because of they cannot pay the house rent, can provide them some type of sustenance so that these institutions, they do not get stopped, closed. There are a lot of institutions which has already hanged the sellout advertisement that the school will be sold, the college will be sold. One college getting closed, too many parents are affected, students are affected from psychological point of view, from economic point of view. So I will say that actually in our country we have got problem of a different aspect. Like Dr. Kamal Chaudhary has said, the governance in the financial sector in the country is very important. So I have got, it directly indicates to 3 points. One, the representative government. This country should not become a crude example of one-man show. It must not have the power centrally concentrated in one hand or in the hand of a group of people. Number two, actually answerability of government management apparatus. It has to be there. The ministers and the financial policy makers should have a system of being answerable to the people in the parliament and in public. And third point is credible democratic system. I'm not a politician. I have got no problem with whoever is in the power, but democratic system for which this country was liberated should not be questioned in this country in any way, because when the democratic system becomes questionable, it turns into autocratic rule for pseudo dictatorship. So that's why, let me give one example and finish it. Dr. Kamal Choudhury has shown the number of banks now is more than 160 in Bangladesh. And new banks have been permitted on political considerations. These were the statements of the ministers. On political considerations, how? This is a total destruction of the financial system as against the trust of the people. If the ministers, those who have done it without the consent of the government, should be taken into task and made answerable to the people and punished for looting public money or helping in looting the public money. When most of the lawmakers are businessmen. In our country, most of the lawmakers are businessmen. And they will have certainly the tendency to enhance their own business and not giving preference to the economic condition of and they are linked to the bank. They are owner of the bank. In newspaper, it has come. We have got 4 banks, and they have failed, taken and plundered the public money, but they are linked to the heavyweight political people, and then people did not get any answer. So so that's why I'll say that okay, it has been reported that the money from Bangladesh sent to Switch Bank accounts, has an amount which is more than the total of 12 best banks in Bangladesh. It should be taken into account. It should be talked about. It should be, this is a problem. The government has to take action. There is a connection, illicit connection of those people, because people are in power. They are connected with there has to be some parliamentary system, of answerability. So I think the first thing is trust, and second thing is corruption. If we can get rid of those things, even bank will become all right, because bank is a place of trust. But if in different ways this trust is broken and people cannot trust the government, the machinery which is looking after, then there is a problem. So I think, let me finish it saying that it was a wonderful choice of subject. It needed wider circulation, and I think the chairman has really accumulated a lot of wonderful resource persons from around, and I feel very elevated joining here, though as a last speaker doesn't matter. Thank you very much.
Thank you very much, Colonel Ashraf. Before we conclude, let me take the liberty of giving chance to Shahida Mustafiz, who has been very silent all through. So I think let us hear her voice, at least 3 or 4 sentences to comment on the whole show or the discussion that went on. Shahida Mustafiz.
Thank you very much, but here I'm only here as an audience, and I've been enjoying this program because, well, I am an IT professional, but I've been closely associated with the banking sector for 22 years, and from the beginning of my career. So I found this discussion very interesting, and PRC is doing a good job. And so off and on, I attended these just as an audience. I know I have been asked to present papers, but somehow or the other I've not been up to it. But thank you very much for giving
Thank
me.
you, Shahida Mustafiz. I forgot to comment, cite one point to Colonel Ashraf. I mean, his points were really very bold and courageous in the context, in the political situation of the country. It is very, very risky to comment on politics, but he has done it. In a planned way or unplanned way, we omitted this point, but Colonel Ashraf has, I think, supplemented or complemented the discussion by citing about the political part of the political scenario that has affected the financial situation of the country. So thank you very much, Colonel Ashraf. Now over to the paper presenter, the protagonist of this show today, Kamal Chaudhary, to respond to all the questions, queries, and remarks that came or surfaced in the floor. Mr. Kamal Chaudhary.
I think Mr. Mahmood Hussain has a question. Please go ahead, put your question.
Yes, my question was towards Ms. Thi. I do understand that your country has done wonderful. I mean, in the case of containing COVID for the last more than a year, I could see that your contamination rate was, total contamination was near about only, less than 1,500 even in December. But unfortunately, although you have wonderfully managed, the death count is very low, 76 altogether. I believe that's why, there could not be made any correlation, to the question of our, moderator, Professor Nakib, because of lack of data, the death data, only 76. From only 76, you cannot correlate. The relationship between the death, more death within the rich community than the poor working class. I do understand that, but my specific question is, what triggered this recent surge? And it looks like it surpassed 15,000 within a span of maybe we're talking about 4 or 5 months. Could you please answer to that? So we'll learn something from there.
Before we switch over to the last speaker, that is our presenter today, I have a comment, which is that COVID situation has also some positive points or blessings, because people are now being oriented with ICT, and they are practicing computer, online business, online food supply, medicine. These people are not so much oriented with the ICT, but they are coming up. That is one point that I can mention.
There is Dr. Shah Alam there. I would like to listen to him just for 5 minutes. Can you call him?
Yes, Mr.
Dr.
Shah
Shah
Alam.
Alam,
Is he around? I don't see
a
him.
very senior banker.
Mr. Shah Alam, please.
Akbar bhai, but my answer to my question.
Ms. T has to give the answer to the question first. Okay.
Yeah. Okay. Thank you.
Dr. Shah Alam, please wait a few minutes.
Anybody want to answer? Otherwise, I'll attempt.
Can I speak now?
You see, this the bordering states, Bangladesh and India. From there, the Indian variant, which has come to Bangladesh, and the bordering districts have been badly affected. And now the lockdown has, to some extent, been successful, but action was slow. because the people were coming from the bordering districts of India, and these things should have been completely banned. The bordering areas should have been banned long time back, because India has been very badly, seriously affected. So that is one area where I think the government, on overall, they have done a good job, but this is one area that they have missed, and the bordering areas have really been affected. From there, the people started coming to the main city, metropolitan cities. So that could be one of the reasons why we have been seeing a surge. Okay, sir? This is my personal opinion.
Thank you, sir.
Thank you. Can I ask, request Dr. Shalam just for a few words?
Yes,
Yeah.
okay. Dr. Shalam, please go ahead.
Thank you.
He's a very senior banker.
PRC, you have arranged a very good discussion forum. Out of the way, I especially thank you for inviting my ex-colleague, Mr. Hamid Haq. However, I tell some vital points about the effect of COVID-19 on banking sector. COVID-19 has generated significant instability and high volatility globally, especially in banking sector and capital markets. The areas of overall banking sector are most likely to be impacted, including valuation and profitability. I like to mention some salient features about the effect of this COVID-19. The areas that are likely to be most impacted by COVID-19 are profitability and credit management costs. The low interest rate scenario, along with the significant impact of the COVID-19, is reducing the core banking profitability in mature markets. Financial institutions are thus shifting towards commission-based income from lives of payments and technical businesses. One of the immediate effects of the health emergency on the real global economy is the increased credit risk of corporate and retail clients of the banks. In order to continue financing the real economy and support its recovery, banks are called to distinguish between purely temporary phenomena destined to be reabsorbed in a short time and longer lasting impacts, which would require actions of management and reclassification. The update of the default rates, which needs to be taken into account any waivers granted by the authorities in relation to only temporary phenomena of expiry of the creditworthiness. The definition of most appropriate time scales for updating the recovery rates in order to be able to factor in the positive effects inevitably in the medium term, delivering from credit recovery policies, which could introduce forms of deferred payments or agreements on longer maturities, that is restructuring of debts. The contraction in economic activity is having adverse consequences on credit quality as banks are increasing loan loss provisions. Securitizing landscape. The corrective actions of governments aiming to mitigate the risk profiles through further incentives for disposals. It is likely that the future market of synthetic securitization may require a revitalization after recent developments and important economic impacts that could come as a result. Over the past few years, the customer relationship and the commercial models, although COVID-19 may lead to a crisis in the real economy, the impact on the banking system and on the bank customer relationship can also be defined as a positive discontinuity for the purpose of digitalization and sector and the ability to offer an excellent customer experiences. Banks, even the most territorial and branch-centric ones, are forced to encourage the use of channels that have never been their strategic priority. The phase would be particularly complex, which banks need to address by demonstrating real proximity with their customers. The clear understanding by banking operators of their gap in the provision of services becoming more tangible than ever before with COVID-19 would make them more inclined to accelerate the digital transformation path through partnerships and collaborations within the fintech community, operational reliances and business community management. Given the necessity to have an unpredictable availability of infrastructural resources, there is a clear opportunity also for the financial sector to evaluate the benefits of the applicable cloud technologies. High volatility of stock markets depressed banks. COVID-19 has generated significant instability and high volatility in global capital markets. The financial sector has been one of the most affected, with bank valuations dropping in all countries around the world. At the regional level, North American banks are still trading at average level, while Asian and European banks are currently trading at significant discount levels. Banking stocks were imparted during COVID-19 in the period from 1 December 2019 to 30 2020. Most banks saw a price slump in mid-March. European banks were adversely impacted as the Euro banks index saw the massive decline of 40.1%, followed. No. Yeah. Should I continue some few minutes? Can I continue for a few minutes, please? To keep a strong correlation with profitability. Shariful. Strong correlation between bank valuation and profitability is emphasized by the depression analysis. আমি লাইনে আছি দেখি আমাকে বলতে দিচ্ছে
I think Dr. Sharlam has muted.
May I continue for 5 minutes? Dr. Nilufar?
You can take one more minute because we have a few more people who might like to comment.
Can I continue for 3 minutes?
1 minute, please.
Yes, I have a vital point. Banks traditionally deal with a wide range of risk, and a pandemic is going to deepen and widen the thorough liquidity crunch, credit squeeze, increase in non-performing assets and default dates, reducing return from loans and investments, reduce market interest rates, and triggering contagious bank run. As such, banks are likely to see increase in the wide range of risks such as liquidity credit risk, market risk, and interest rate risk. This is likely to be worse than particularly in developing countries where banks serve millions of individuals and firms with relatively lesser financial and economic capacity under a work policy environment and aggressive market competition.
Dr. Arlam, we must finish now. may I request you to please send your paper to the Director Research? All these papers are going to be compiled, and the recommendations that emerge will be sent to the respective government departments. So I would just like to thank all the speakers today, particularly Mr. Kamal Chaudhary, Mr. Hamidul Haq, for all the time that they have given, and our friend from Dubai, Mahmoud Hussain, for the excellent presentation on Islamic banking, and the other speakers from India and Vietnam, etc. So thank you very much, ladies and gentlemen. We are going to meet again next July 28th. The theme will be communicated to you, but may I request all of you to kindly pass on to us your paper in brief, highlighting the recommendation. It will be of great help to us because we'll have to communicate with the government authorities. Thank you very much, sir. Thank you.
Thank you also.
Thank you. Assalamu alaikum.
Thank you. Salam alaikum.
Thank you, everybody, for attending the seminar. The next seminar will be on the 28th of July, and it will be on digital divide, South Asian perspective. So hope you all attend the seminar.
Thank you so much.
Dr. Nakib,
Thank you so much. And see you again.
for being such a good moderator. Thank you very much. We'd like to see all of you again. And I don't have time to, I think nobody has time to go one by one. So I would like to thank you, all of you, for being here with us today. Thank you. Thank you very much.
Thank you very much. Good night and Khuda Hafiz.
Thank you.
Thank you and good night.
Thank you.
Bye-bye.
Thank you. Thank you, Dr. Nakib.
Thank you. Thank you, Dr. Nilüfer. Thank you very much.
Nilüfer, bye-bye.
Thank you, everybody.
Thank you. Thank you, Dr. Ashraf. Ashraf, bye. Thank you.
Thank you. Shashina then. Shalbul. Shashina. না
মানে মাইক অফ করে দিন
না এখনো চলছে
হ্যাঁ মনে
দেখা যায়
একটু কথা কইতেছি
ওই আমি তো ধন্যবাদ দিতেছি সিনেমা
আচ্ছা দাও
ওই আনমিউট করলে
আনমিউট করা
কই এমনি আমার শুনবে আমারটা
হ্যাঁ শুনতেছি আমি শুনতেছি
আচ্ছা